Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
This is Brian Bolin, and I am the aggressive growth stock strategist. And I'm here with my top stock pick for the week, and it's a timely one. It's NVIDIA. It's NVDA, as you can see from the screen, and it's a Zacks rank number 2, and that gives it a buy. And we can also see that it has a F for value and a C for growth. And normally in my growth videos, I like to have a big divergence, meaning a big difference between the two scores here. Not a gigantic difference here, C and F, but pretty good. Those look like the grades that I used to get back in school. I'm going to take just a quick look at the chart here, and I am going to talk just a little bit about this up and down and up and down and up and down pattern here. And we are headed into earnings on Thursday of this week. So obviously, is there something going on here? Are we at the bottom end down around 510 there? That's kind of where I'm going with this. And we've got earnings coming up this week. So with the stock trading, oh, look at that. It's already up 11 to 543. So obviously that chart's going to be up here to 550. Do we press on to 600? And I think that's kind of the idea of where I'm going with NVIDIA. So let's take a quick look here at the other numbers that I always love to look at. Number one, we see the earnings surprise history. Nice big beats, 13%, a small little just 6%, and then right around your 13%. So you can see we're used to beating it at just in an approximate number there for NVIDIA, which is always, good to see. Estimates did kick higher after last beat and then just trickled up, so here's the beat and then just a trickle higher, another penny here. Those 2 pennies helped with the trickle there. Next year is a long ways off, but still we can see the numbers moving here, and then we can see 9 from 11, from $9.13 to $11.03. That's good projected earnings growth rate. If we look at the valuation here, you're going to say, wow, 58 times earnings. That's a lot. And I even put it onto a marker there as opposed to the highlighter. So now we can see it even if I run over it. It's 70 times trailing, but you're paying for a gigantic growth number. It's 50% growth over last year right there, as you can see that 50 number there. 23 times book is also a lot. 25 times sales is a lot. I get it, but margins are increasing here, and look at the 28-29%. That's great to see. So I like this name, and I like it to beat, and we've got a good history of beating the number. And as we take a look at this chart right here, we can see demand is still pretty good. What the Curb Your Enthusiasm guy would say, David, what's his name? Pretty good. It looks really good to me, and I think we've come up near that $600 mark, and I wouldn't be a bit surprised if it continues higher. And there's my dog barking in the background. Someone must be coming to the door, so I'm going to kick this over to Kevin Cook for his top stock pick.
My top pick of the week is HOLX, symbol HOLX. They're a diagnostics company that specializes in women's health, primarily mammograms, that sort of thing. And apparently they own 75% of the mammography market, which is unbelievable. They just reported a stellar beat and raise quarter. This article is my bull of the day, published on Monday, November 16th. And I'm going to be referencing it a lot, but you can just search the ticker on Zacks, HOLX, and you can find the full article. The reason that HOLX has seen estimates just soar is because they make testing kits for COVID. So like a Quidel and some others, and estimates have just rocketed here. So they just had a big beat and raise quarter. They delivered $2.07 versus the consensus of $1.22. That was a 70% beat. Revenue beat big, and analysts have just responded by raising estimates dramatically. Let's take a look at the detailed estimates page here on Zacks, where we've got all the data. So scroll down here to this table for sales estimates and earnings estimates. We've got 6 analysts giving us estimates for the current year. They just reported their Q4 ended September 2020. So fiscal 2020 is over. We are now in fiscal 2021 and Q1 of that, and we're looking at approaching $5 billion in revenues after 3.8 last year, which would be a nearly 31% jump. And you can just see how these quarters are starting to come in. It's going to be 54% year over year top line growth for December quarter, nearly 74% for the March quarter, and this is mostly on the back of these COVID tests. Now you look over here to the far right, the following year shows, hey, a decline. Now this is really two things going on here, a dynamic where, number one, analysts have just produced their models for the new fiscal year, and they haven't fully updated how September of 2022 looks. There is also an argument to be made that the big sales spike here is about COVID testing that is going to eventually dwindle down into 2021. And so that this growth by some views is not sustainable. But I look at it as this is an exciting diagnostics company in women's health with lots of innovation, and how quickly they adapted to grabbing big market share in COVID testing. And I think that speaks to their rapid R&D and innovation. Let's take a look at the earnings estimates, and then we'll see some of the analyst views. So you're looking at, for the new fiscal year here, we are in Q1, 59% EPS growth. And you look at these quarters that are going to come in, projected averaging 200% EPS growth for the December and March quarters. And this is all 8 analysts reporting here on EPS. You can just see how things moved quickly from, even before this report. Basically you've got this, big double-digit jump in EPS in just a month here. So that's how far analysts were behind on this story. All right, let's look at some of the analyst views. A couple of noteworthy innovations from the company. On October 30th, they announced a new, they announced a government contract, which will fuel their ability to scale up to 13 million tests per month in the COVID market. And then innovation-wise, they rolled out a new platform in women's health, which looks pretty exciting this is like advanced technology for women's health that, is more of a digital platform. All right, let's look at some of the analyst views here. Jefferies analyst raised his price target to 98 from 80 on the monster quarter COVID testing, and EPS estimates to come from 365 to 638 for fiscal 21. Needham goes to $88 in the price target. Looking at the whole business, HOLX breast health, gynecological solutions, in surgical too. Wells Fargo analyst goes to $90 on the price target. He likes, the whole diagnostics platform. JP Morgan analyst goes to 85. He thinks HOLX is extremely well positioned to capture the large opportunity associated with COVID-19 testing. And again, let's look at this morning's news. You've got Moderna with just rolled out phase 3 data that is even better than the Pfizer vaccine for a couple of reasons. One, I think the efficacy was like 94.5% effective, and it doesn't need the super cold storage like the Pfizer vaccine. It does need obviously some refrigeration, but not the deep freeze, and can last up to 30 days. It's more stable. So that's good for Moderna. It can be bad for the testing stocks. Here's a look at HOLX's price chart. And by the way, I own it. I bought it for our healthcare innovators portfolio here at Zacks. And I say buy it under 70, and just for the growth and the innovation here. And you're seeing it dipped a little bit on the Moderna news, but coming back to 70 here. Let me just see if there were any other good analyst calls here. SVB Leerink, that's Leerink Swan got bought by Silicon Valley Bank. Analyst goes to $94 on the HOLX price target. He loves the COVID testing ramp and considers it sort of a COVID hedge. All right, so that's my view. Again, I own it for Zacks Healthcare Innovators, and we'll talk to you next time.